What is going on, Alpha Hunters? Hope you guys and gals are doing great this week. We saw a little knee-jerk reaction in the marketplace, and it wasn't really anything catalyst driven too much, not too much heavily catalyst driven, right? I mean, we do have earnings going on, but we saw some moves on the market this week. Okay, so what we're gonna do in this week's video is I'm gonna show you kind of what went on this week for those of y'all that need the wrap up, and then we're gonna look at the SPY Qs, IWM, and the DIA. Okay, and we're going to kind of get a sense of what is moving out there. All right, and then probably look to see if we want to rearrange the plan. So let's dive in. All right, looking here at the SPY, we started out the week pretty much flat. We didn't see much change kind of take place from over the last weekend's gap. Right, we had a Monday was a holiday, so we started the week out on Tuesday. And I did mention last week, expect a little run up. Expect a run up early this week, as for obvious reasons, we finished last week kind of strong, breaking out of that consolidation that we had been in for really the second half of December, very beginning part of January. So we broke out of that and we continued higher a little bit early this week. And then started seeing some pullbacks. Okay, so we saw an early run up on Tuesday, and then we pulled back and just kind of hung out. We didn't really then do a whole lot. It was a pretty quiet day after that first about hour and a half or so. Tuesday, okay, so we got pretty good action on Tuesday. Nice little gap up. We're seeing some earnings out there, and earnings, they've been okay. But saw a nice little gap up. Tried to make a run the first hour to take out that Tuesday high. We did not take it out on the SPY. We'll look at the IWM and some of those here a little bit later. But the first hour was pretty quiet. And then after that, it was just sell down the whole day. Okay. And it was really kind of interesting. If you didn't hear this week, the FOMC chairman, Mr. Jerome Powell, got COVID, or was announced he got COVID, and it came out right at the end of that first hour. So I don't know if that is the catalyst that drove the market to sell down for Tuesday or what. But that was announced about an hour after the market was open on Wednesday. So yeah, Wednesday we just saw a lot of selling come in after that first hour. And then a little bit continuation then on Thursday. Expect continuation when you have big time moving days. So we got some early weakness then on Thursday, sell down, did a nice little buy up, and then just kind of a little sell down towards the end of the day. Not a whole lot of change from open to close on the day on Thursday, but most of the activity on the day was just really from the gap down. And then Friday had a nice little gap up, driven a lot by earnings from Netflix, really kind of helped spilled over into tech, and tech then helped lead the way on Friday with a nice little gap up, and then just traded higher. Nice little consolidation here, middle part of the day, and then once we broke higher, continued to push higher. Now, a lot of this bullish move was really from one of the Fed presidents coming out and saying that he supports a quarter point rate increase on February 1st, and you know what? Just about everybody else has also been saying that. So I don't know why the market went game busters about that, but they did. It is fine. But on Wednesday there was still a Fed president out there. I forget who it was, basically saying we're going to go over 5% on the Fed funds rate. So it's just weird how on one day it's they're selling because of it, and on one day they're buying because of it. So they haven't really deviated too much, even this week, on what they've been saying over the past couple of weeks. Really, they've been saying, probably a quarter point, but they're going to continue to push the quarter point higher and higher. But the market's expecting it to stop in February, and the presidents and the board of governors that oversee the FOMC, they expect it to probably just continue to go higher into Q1 and probably Q2. Okay, so what you see here is the bar chart in the background. I'm going to probably start showing this off every week just so that we get an idea of the rotation that is taking place during the week. But this is all the different sectors in the S&P 500, and we kind of want to just see what is performing and what is underperforming, right? Because helping to understand that switch and that rotation really helps us know where the opportunities are and where Wall Street is moving the market. So for the week, you can see the XLC, the communication sector of the S&P 500, was up about 2.65%. That's a pretty solid gain. Tech XLK was up about 0.5%. And then the energy sector actually still outperformed the S&P 500, but it was actually down about 0.3%. So even though it was down, it still was one that was helping hold up the stock market. Now, the ones that performed roughly in line, but a little bit under the S&P 500 were the XLRE, which is real estate, XLY, which is discretionaries, consumer discretionaries, XLV, which is healthcare, XLB materials, and XLF financials. And the three areas that really just lagged on the market this week was industrials, utilities, and staples, the XLI, XLU, and XLP. But one of the things I want to show off is I actually want to move the left side of the chart here to the top that we put in Tuesday morning. And I want to show you kind of what started to happen on the rotation then on that day. So I adjusted the start to that top that we hit on Wednesday morning. And what we can see is discretionaries really sold off here. Now I know the XLU and the XLY are kind of like a gold or yellowish color, but the XLU wound up being right here and the XLY wound up being right here to end out the week. But during that sell down from Wednesday into Thursday, the XLY really kind of underperformed here on the marketplace. And it wasn't really until the Friday session where they got an uplift from the risk on type of mindset that then you saw them kind of have that bounce back towards the end of the week. But after we topped out on Wednesday and rolled over into Thursday, the XLY really did underperform. The other one that was really kind of underperforming too was tech. That was the third weakest sector out there by the end of the day on Thursday from that top out on Wednesday. XLI industrials, man, they lagged all week. They didn't really see any bright spots anytime during the week. But the XLK, the tech area, they did also get an uplift and wound up being the second best performer since that peak by the end of the trading session on Friday. So it's just kind of interesting to see the way some of these played out during that sell down, as a lot of them were risk off type plays going into the Thursday close, but Friday really kind of helped save a lot of that. And you can even see the XLC just absolutely exploding higher. And the XLC was doing pretty good even into that Thursday session. But Friday, yeah, just really getting lifted, especially off the Netflix earnings. Okay, so looking here at a daily time frame here on the SPY, this P500. So I'm looking all the way back to the beginning of 2022, which is, about when we topped out on the stock market and started rolling down into the bear market, right? So I want to kind of run through the SPY, the Qs, the IWM, and the DIA, and just kind of look at how they're all kind of shaping out, okay? And what we can kind of see on the four major averages that people watch. But the SPY here on a daily, if we turn on the MACD and stochastics, we can definitely see that we're just kind of resting here on a daily. We're floating really close to the zero line. Even really over the past few weeks, we've been crossing over it on the MACD. So we're not really doing a whole lot. And you can see from the highs that we had in December to the recent highs, if we don't take out the recent highs that we just put in earlier this week on the SPY, you can definitely see that we do have lower highs coming in on the readings of the stochastics and the MACD. So possibly continue in the bearish direction. It's kind of hard to judge it here, but let's look at a weekly. So as we can see on a weekly, we do have a very clear uptrend line coming up. And this is from the October bottom connected in with the end of December kind of lows, and even the lows that, kind of we even put in this week. And this might have been one of the reasons why the market was bouncing. We were kind of getting into the lower ends of that trend line, or that upper trend line that we've kind of got coming up now. So we're definitely getting to that, pivotal point now. Are we going to break out, or are we going to break down? So we do have that setting up, and that is there also on the daily, but it's a little bit more obvious to see here on the weekly. And there's a little bit more to talk about here on the weekly as well. The other thing here to notice is we do have lower highs, right? From August to December, so far in January, we have lower highs. Now, we do also have higher highs here on the stochastics, and that played out in August, December, and so far we do have a higher reading on the stochastics. Now I'm going to get to why that's important here in a second. Now, if you look at the MACD, same thing here. we have a little bit of a higher high to December, and we are still making a little bit more of a high here in January. Okay. So what this is kind of saying is we haven't gone anywhere in several months, right? Back when we were selling off into this area the first time, back in May, that was all the way back in May. So that was nice. What is that? 7, 8 months ago? I don't know. Math is hard. I don't really count backwards. Sorry. But we can see that the stochastics is getting closer and closer to this overbought area. Okay, so anything above the purple zone here, this is the overbought area. Anything below the purple zone here on the stochastics is the oversold area. So as you can see, the market's just been resting for a while now. And now that we are just getting into that oversold area, or kind of getting up close to it, it's starting to potentially build up that momentum to take it into that bearish direction. Now we'll see how it breaks out here probably soon, maybe here over the next week, maybe the week after. We'll see how that works. But, it can very easily just get into the oversold area and start to push higher. I mean, I've seen that happen before. But here, looking at the MACD line trading higher, and all it's doing is just hanging around the zero line. So there's nothing really moving here. There's nothing to give us a clear indication that anything's going on. Most of the indicators are just kind of normalizing. They're not really moving in any particular direction. So very interesting to see this on the SPY. Whenever you get lower prices and higher readings on your indicators, those are typically going to be bearish divergences, okay? Okay, take a look here at the Qs. We'll look at the daily first, and then we'll look at the weekly. The Qs as well, you're seeing a lot of normalization on the indicators. Really, the MACD on the daily time frame is mostly just resting. It's barely just now getting back into the positive area. The stochastics barely got into the overbought area earlier this week, and then had a quick reversal out of that. But we did see a lot of buying here on the Qs on Friday, but didn't take out the weekly high. But it definitely is something to note that it did get into the overbought area just briefly this week. So here on the weekly on the Qs, we're seeing the same kind of pattern set up here between August to December highs, that they are coming down on price, but the stochastics here has a higher level, and that's also showing a divergence. And if we look at the MACD's really kind of just been hovering down in these really low areas. It hasn't really made a new high, and really it's kind of flat to where it peaked out back in August. So not really much kind of going on there. A lot of these indicators seem to just be resting, maybe trying to find the next direction where to go. But you can see that we might be pushing up here, making a new high here on the stochastics here probably pretty soon. Maybe as we get into next week, get a new reading, it might be a little bit higher, and make a new high compared to the December high reading on the stochastics. So we'll have to see how that plays out. But a lot of these seem to just be resting as well, and we do have higher lows actually do coming through on the Qs also. So the Qs still might get in here and chop around maybe in this triangle area a little bit longer as well. We'll kind of see how that plays out. But the Qs price-wise is still making a little bit of a higher low, over the October low to the end of December kind of low time frame. And so, it's just going to take a little bit of time to figure out kind of how this is going to shake out. But for now, definitely making some higher lows here. Looking here at the IWM daily time frame. Now I'm going to zoom in here real quick, and that way we can look at the highs that we put in back in November, December, compared to the high that we put in on Tuesday. And what is very, very, very interesting here on the IWM is we snagged that high from November on Tuesday. And then after that, that is when we saw a lot of selling come in on the IWM. So very important level to kind of just get up there, snag it, and then come right back down. And that's also about the same time when on the daily, you're sitting on overbought signals on the stochastics. But as we take a look back at the whole year here, and just remember, the IWM also did top out in November of 2021, not in January of 2022. So Very important to understand where the market top actually was here. And we haven't really done anything on the IWM. We haven't made new lows really since here. Since June, we made the low. June 2022 is when we actually had this bear market low on the IWM. And we haven't even gotten close to taking out this high that we put in back in August. But we did make a run back down in October to try to get down to that low. It got really close. So you could say that that was the test of the low, and possibly the IWM is setting up to go on a bullish run here. But as we take a look here at the weekly, definitely got some higher lows coming through, except for this week. We finally got a new high compared to that November high that we put in. So we do have a higher low and a higher high, right? Barely, 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 but it is there. And if you're trying to be bullish, you got to take the little wins, right? That's all you got to start doing, is you just got to start poking your head up out of the sand and start getting the market to turn in your favor. Some of the issues though that you are seeing here is, we're not really going anywhere, and we're seeing a lot more normalization on the MACD and stochastics. Even the stochastics back in December was hitting the overbought range, and even here recently has started hitting the overbought range. So not a really vote of confidence. You probably want to see it a little bit more of a settle out, and possibly have the stochastics come back down before you can push higher. And maybe if it can just kind of hold on and chop around sideways and have the stochastics come down a little bit and then push higher later. But this is not one to say that, hey, you know what, we're still looking extremely bullish here. We've been sitting at kind of the overbought area now for almost 2 months here on the IWM, on the stochastics here. So not really looking the best, but the MACD also is just very slowly floating up to the normalization line area, the zero line area. So not a lot kind of going on here on the IWM. So again, another major ETF not really given a lot of clear indication on where we are going. So looking here at the DIA, the Dow Jones ETF, we had a very strong run on the DIA back basically from the October low into about the end of November. And we haven't done much since, though. We didn't do much since the sell down we had, coming out of the FOMC and CPI data in December was basically the biggest move we saw. Then we got in and kind of consolidated, pushed a little bit higher at the beginning of January, and then we've come back down. But as you can see on the indicators, we do have some pretty good maybe crossover action here on the MACD. Looks like into the bearish direction, with possibly the stochastics actually being in the oversold area. So one of the few daily ETFs actually out there out of these major four that's actually hitting like the oversold area. So possibly really good news here for like some of these big caps. We'll just have to wait and see. But we did see some really very, very strong selling come out of the DIA this week. Okay, very important. And another thing that I really want you to look at, I'm gonna zoom in here a little bit, and we got this August high, and we did not take out the high back in the spring of 2022. We kind of got up into that zone from March and April of last year, but we did take out this high in August, back in November and December. And what's really kind of interesting, I'll just put a little line there. We got above it twice at the end of November and then in December, and then we came back down. Okay, so you can say false breakout, and even this recent time we consolidated for a while. We started to push higher, and then this week we just broke right down. And Tuesday, while most of the other four major averages were just kind of hanging out, they weren't doing a whole lot. Man, we saw a lot of selling come in on the DIA. The Dow Jones was down like 1% roughly on that day. Let me check. Yeah, it was down 1.1% on that day, which was Tuesday. So might be a little bit of a shift here possibly in the market, because this is about the third time that it has poked over that August high, and it has not held it one time. And with how much selling we saw come in on the DIA this week, I don't know, because it's already back down in its consolidation zone that it held back in late December, very beginning of January. And, it's not far from possibly breaking down. So if we get any kind of weakness here on the market, the DIA might get below this consolidation zone pretty quick. And we'll just have to see. But yeah, definitely something to probably watch here on the DIA. But looking here at the weekly, you can see these false breakout attempts, even that huge upper wick that we had that week of the FOMC and the CPI data. Even here recently, that false breakout getting above that line and coming back down this week. So we do have a downward sloping MACD histogram. Not really something I care to look at that much, but possibly it just says that there's not a lot of strength. And you see that there's not a lot of strength coming through on the DIA here over the past couple of weeks. Even the stochastics is sitting here in the overbought zone for roughly 2 months now that it's been there. So it looks like it might be making a little bit of a crossover here coming soon. It did make a new high here in November, which new high on the stochastics as well as a new high here on the MACD. So not really a divergence there, but we could possibly be seeing some of these indicator lines probably switch over, make some crossovers and start to head down. So we'll see if they just normalize out here and the DIA maybe just rest, maybe it just breaks down a little bit and rest and before it pushes up, or if we do start to see some real selling come in on the marketplace. But out of this next week, the one I think that would be worth watching pretty closely would be the DIA for a lot of reasons. One, we've had a couple false breakout attempts above that August high, and we have not held it. Okay. The other is we are sitting on overbought readings, right? We got this overbought reading here on the stochastics, and it was on quite a bit of a run back in the October to November period. And so if it starts to roll over and rolls down, the DIA has some of the heaviest weighted companies out there in the marketplace. So if the DIA is going to struggle, it's going to put pressure on the other major averages in the downward direction, as these companies are typically just the largest ones out there. So this is very important to kind of watch, as the DIA as just large companies. It's just a representation of large companies. So if the DIA struggles, it might really, really start to put some pressure on the other averages out there, like the SPY, the Qs, the IWM. So just make sure you're keeping an eye on the DIA here, because this bearish engulfing or one black crow, whatever you want to call this kind of candlestick pattern that formed out over the past 2 weeks, is something that definitely screams bearish. This just screams bearish here. So I'll leave you with this one last little tidbit. The SPY and SP 500 actually, from last Friday's trading session to Tuesday and Wednesday of this week, did form out a very nice evening star reversal pattern where we did engulf and definitely took out the low of last Friday on Wednesday. And we did that with pretty good volume too. So that was the highest volume day of really the past roughly 8 trading sessions. The bears came out on Wednesday, definitely were looking to get rid of some stuff. So if all we did possibly on Friday was just retest higher, we're going to have to find out early this next week. And typically whenever we do see days like this, especially days in previous bear markets like the one we saw in 2001 and 2, whenever you got really strong days from the tech sector, like the Qs, the next day or the next day or two, you saw a little bit more of a drop. Okay. Not saying that's going to happen here, because we are sitting right on this downward trending line, and on the Qs and the SPY, I mean, we're really close to it on the SPY. And just remember, if you do use log, this is the log chart turned off. If you have log chart turned on, it's a little bit further away. Just be careful, making sure which one you're looking at, as if you have log turned off, you might be thinking we're breaking out, but it could just be a false breakout, and maybe the market's going to go by the log being turned on this time. I don't know which way is right, and really it doesn't matter. The market's going to work how it's going to work. You really want the market to prove to you which way it's going to go. This is why you really want to see the market push higher, break through that zone of that downward trending line. Or if you're trying to be bearish, you really want to see the market break down through this upper trending line. So just kind of keep that in mind this next week. And really, it doesn't matter which way the major averages are leaning. Once the SPY kind of breaks out of this kind of consolidation, this point, whatever it's trying to make here, all the averages are going to go with it. They'll all go. You know, if it's bullish, it's bullish. If it's bearish, it's bearish. So definitely keep an eye here. Keep an eye on the DIA as well, as you know, you got some big heavyweights there, and that was making some pretty bearish signals this week. But for now, I do think this is probably going to continue just to play out. We might not break out or break down this next week. I wouldn't expect it. And really, we might not even until we get to February 1st. You know, Fed Day might push us one way or the other. And then here's another thing. That also might be where maybe we get a false breakout. Like if we break out a day or two before that, like the end of January, if we break out bullish or we break out bearish, watch out for Fed Day to reverse that and push us in the other direction. Possibility, just saying, be mindful of it. There's a lot of parties at interest right here, right now. So Alpha Hunters, y'all have a great weekend and take care.